right, we head now to Florida, where the Distressed Investing Summit is underway. Our Carol Massar is there covering the event, and she joins us now with Ted Stenger, Managing Director of AlixPartners, a firm that specializes in restructurings and bankruptcy reorganizations. And Carol, a lot of investors distressed today, although that's not exactly what your conference is about at the moment.
No, a little bit different, but we do have a lot to talk about. Lisa, thank you so much. I'm here with Ted Stenger. Ted, when we look at the distressed investing world, it's interesting to hear you guys in the conference, because good economic news or good outlook isn't necessarily good for you guys, is it?
Right, that's true.
What's the outlook at this point? Do you feel like things will get tougher for companies going forward?
I think the overall picture is actually fairly good for companies. One of the things we talked about earlier today was the fact that really beginning, I think, in 2007, when the commodity market started to move, a lot of businesses, at least in North America, have been very proactive in cutting back on costs, on actively managing working capital and inventories. And so you've seen people weather really what's been a terrific downturn and not have nearly the amount of dislocation and bankruptcies and defaults that we would have expected.
I mean, they really are stronger. We constantly talk about all the cash on hand. I mean, they really do have stronger balance sheets.
I think the inventory levels are better managed. As you said, highest level of cash ever on balance sheets. That gives management a lot of flexibility to make smart decisions and hold off on things and capitalize on opportunities like acquisitions or expansions of their business.
When our anchor Lisa Murphy tossed to you, she was doing some stories on banks and also on retail. These are two areas, or especially retail, I think about, that you've been involved in. You were a treasurer at KMart when KMart was going through a tough time.
Yes.
I mean, what is the outlook for a company like KMart that really seems very lost at this point?
I think retail is going through a lot of different changes. I think you get two things right in retail and you can do a lot of things. One is know your customer and have merchandise that your customer wants. I think that applies whether you're bricks and mortar, like Kmart, or an internet presence, which Kmart also has a large internet presence. I think they have to do a lot with really tuning up who their customer is and how they're going to attack them with bricks and mortar. I think that Kmart still has a lot of challenges from the boxes they're in, and the Sears Land's End combination created a lot of baggage for them.
One thing that was also came up in a panel that you were on earlier is the financial industry. We talked about how many banks are still on the FDIC's watch list. I think it was something like 800. You said that potentially, if things play out as maybe it looks like it could, that there could be a lot of opportunities among those financial assets for distressed investors.
Right.
What specifically?
Well, I predicate that on the new program that the FDIC has, which is going to take a lot of those companies and larger companies that would have perhaps previously gone through a Chapter 11 restructuring and push them into the FDIC. There's a big difference between the FDIC and a bankruptcy restructuring in that the FDIC does not have the infrastructure in terms of people and professionals to actually manage the sale, to maximize the sale of all these assets.
So great opportunities for folks like you and others.
Right. Or distressed investors to come in, because to the extent FDIC is in charge of it, they're going to be liquidating them faster. They're going to be, I think, not as much competitive pressure on pricing. I think you can scoop up, at least on the loan side, some pretty good deals and work your loans and get a good recovery.
All right, we're going to have to leave it there. Ted, thank you so much. Appreciate it.
Thank you very much.
Ted Stenger, Managing Director at AlixPartners. Lisa, back to you.